Hey, today I'm going to talk to y'all about SAS 145, understanding the entity and environment and assessing the risk of material misstatement. SAS 145 was issued by the AICPA's Auditing Standards Board. SAS 145 supersedes SAS number 122, and it also amends various AUC sections in AICPA professional standards. SAS 145 is effective for financial statement audit periods ending on or after December 15, 2023. This is in order to correlate with the effectiveness of SAS number 143. I'm not going to go into detail on that, but if you are an audit, or even if you're not, it might be beneficial to inform yourself on that. All right, the primary purpose of SAS 145 is to enhance the requirements and guidance on identifying and assessing the risk of material misstatement, particularly the areas of understanding the entity's system of internal control and assessing control risk. This is to clarify overall understanding of the entity by evaluating certain aspects of the following components of internal control. That's control environment, risk assessment process, monitoring, information system and communication, and control activities. There are many characteristics of SAS number 145, and I'm not going to be able to go through all of them for time's sake, but I will briefly mention majority of them right here. SAS 145 provides guidance that is intended to enhance the auditor's application of professional skepticism in performing risk assessment procedures. It addresses the auditor's responsibilities related to the entity's system of internal control, provides guidance on scalability, revises audit documentation requirements, includes conforming amendments on performance of substantive procedures for each relevant assertion of each significant class of transactions, account balances, and disclosures. And it also includes extensive new guidance on information technology and the consideration of general IT controls. All right. And continued characteristics. It revises the definition of significant risk, includes a new stand-back requirement that is intended to drive an evaluation of the completeness of the identification of significant classes of transactions, account balances, and disclosures by the auditor. It includes a new requirement to separately assess inherent and control risk, and requires control risk to be assessed at the maximum level. All right, so the first one I'm really going to hit on is significant risk, the revision of that definition. The revision of the definition of significant risk is to promote a more consistent approach to determining the significant risk. The new definition focuses more on the inherent risk assessment rather than on the response as the previous did. Focuses on those risks for which the assessment of inherent risk is close to the upper end of the spectrum of the inherent risk scale. It is due to the degree to which inherent risk factors affect the combination of the likelihood of a misstatement occurring and the magnitude of the potential misstatement should that misstatement occur. SAS 145 no longer requires auditors to determine whether a financial statement level risk is a significant risk. However, identified risk of material misstatement at the financial statement level may affect the auditor's assessment of significant risk at the assertion level, but it's not required to assess those separately. SAS 145 acknowledges that the determination of a significant risk requires professional judgment, so that could vary based between auditors. The new stand-back requirement, as I mentioned earlier, it's intended to drive an evaluation of completeness. For material classes of transactions, account balances, and disclosures that have not been determined to be significant, this stand-back requirement requires the auditor to evaluate whether the auditor's determination remains appropriate for those that are not determined significant. Also requires the auditor to perform substantive procedures for each relevant assertion of each significant class of transactions, account balance, and disclosure, regardless of the assessed level of control risk. Identifying and assessing the risk of material misstatement. So these are just a couple definitions that were either revised or new in this standard. And first, we'll talk about inherent risk factors and the inherent risk spectrum. Inherent risk factors are characteristics of events or conditions that affect the susceptibility to misstatement, whether due to fraud or error of an assertion about a class of transactions, account balance, or disclosure before consideration of controls. Depending on the degree to which the inherent risk factors affect the susceptibility of an assertion to misstatement, the level of inherent risk varies on a scale that is referred to as the spectrum of inherent risk that provides a frame of reference in determining the significance. Next is relevant assertions. The definition was revised to clarify that an assertion about a class of transactions, account balances, and disclosure is relevant when it has an identified risk of material misstatement, taking into account the likelihood and magnitude of that misstatement. And lastly, we have significant class of transactions, account balances, or disclosures. This is a new definition. A class of transactions is considered significant when it has an identified risk of material misstatement at the assertion level. And your significant, this determination should be made before consideration of any related controls. Inherent and control risk. As I mentioned earlier, under SAS 145, these now are required to be assessed separately. And I really want to go into more detail on the control risk. Under SAS 145, the control risk now has to be assessed at high or maximum level unless the auditor intends to perform a test of operating effectiveness on those controls. When the identified controls are designed effectively and implemented, risk assessment procedures may influence the auditor's determination of the nature and timing of the substantive procedures to be performed. That could include inspection versus external confirmation, or performing tests at interim dates versus at year-end. All right, in conclusion, SAS 145, the impact of that will vary from firm to firm, depending on the methodologies and technologies already used. So I know some firms, for example, already assess the control risk at maximum level if they don't intend to test. So that may not change for them. Others, it will. Hopefully SAS 145 is going to enhance the quality of audits. That's the main drive of it. SAS 145 isn't to implement new rules or new information, rather to redefine and kind of provide a more in-depth. It's used to assist auditors in planning the engagement and hopefully to keep auditors on track throughout until the end. And that is all I have for you guys, but please let me know if you have any questions. Thank you.